Guys, we are going to look at the preparation of the statements in this particular video. What we see here is accounts. They have their balances with their debits or credits, and it's really in just kind of random order. So the first thing that you want to do when you look at this information is you want to make sure that your accounts are in order. And the order that we want to use is we want to make sure that all of our assets are first, then our liabilities, then we're going to do our capital accounts, then we would do the drawing, then revenue, and then we would have our expense accounts. So this is the order that we want to put these in. So what we'll do is we will go through and we are going to put these accounts in order. And so what we have first is we do have the cash account. The cash has $6,800 in it. Then we can go to accounts receivable. Accounts receivable has $2,500 in it. The next thing I see are like trucks and equipment. So we would do truck, and the truck is $8,500. Equipment would be $6,300. After we finish all the assets, then we would go to the liabilities. We have accounts payable. And accounts payable has a credit balance of $3,500. Other ones that we have, it looks like notes payable and salary payable. So I'm going to do salary payable. It's at $200. And then we would have our notes payable is going to be at $8,200. We would then have our capital and drawing, and if you look at the writing, it says the proprietor, J.D. Wilson, contributed $3,000 at the beginning of the year. During the year, he made $12,000 in withdrawals. So we would have our capital account next, and that capital account would have the $3,000 in it. He withdrew money, so that would be the drawing account, and that drawing account would then have $12,000 in it. When we get through with that, we would put in our revenue, and we have service revenue. And service revenue is $31,900. I'm going to move over to the next page since I don't have enough room to finish, and I will list out my expenses. So here I have salary expense, and for salary expense that is going to be $4,500. I will have repair expense for $800. Supply expense is going to be at $1,600. And then I have gasoline expense for $3,800. So now that I have all of my accounts written down, I can now go in and look at the information to see where I'm going to start my journal entry. So I'm going to come back to the first one, and what I'm going to do first is I want to draw a line, and I'm going to draw a line right above the capital account. And what I have with this is I want you to remember that these are my permanent accounts, all right? So these are also my balance sheet accounts. I'm now going to take and draw a line in between drawing and service revenue. do not have that lined up. I'm sorry. That was 200 there. Notes payable, let's see, it was 8,200. And then I had 3,000 here. Sorry, that wasn't lined up right. So I'm going to have this information, and with this information, this is where I'm going with my statement of owner's equity, and then everything below that line is going to be the income statement. So the service revenue, and then all of this information is going to be part of the income statement. Now, when we get ready to look at the statements, we have to complete the income statement first. So the income statement is going to be the first statement that we actually will prepare. And looking at this, what we have to do is we have to go in and make sure that we have our headers and everything else in like we need them to be. So when we start it, we will have Wilson Mowing Service is the company name. This is going to be the income statement. And it's going to be for the year ended. $12/31. Because this is a statement that encompasses the entire year. When I start it, I always start out with my revenues first. So I will have a header for my revenue. The next step in here is I'm actually going to indent over, and then I would list all of my revenues. In this case, I only have service revenue, so that would be all that I would be listing for that. And it is in the amount of $31,900. So I'm going to come all the way over to the far side in the very last column and put $31,900. Now I need to total all of my revenues. So I would get a total revenue, and that would be at $31,900. After I finish my revenues, I am going to come down and I will have expenses. And so I will come right down underneath that revenue, and I will put in my expenses. The other thing that I look at here is I want to come right under here because I'm tabbing over the same amount, and I'm going to put in all of my expenses. So in this case, I would have a salary expense, I would have repair expense, I would have supplies expense, and I would have gasoline expense. When I look at these totals, I'm actually going to indent over because I need to make sure that I am coming through and I can have a space to line these different accounts up. So salary expense is at $4,500. The repair expense is at $800. Then I have the supply expense at $1,600. And I would have gasoline at $3,800. I would then take and draw underline right here because I need to add all these accounts up. And remember, that underline means that some mathematical computation is happening. I also need to look at my total expenses. So once I go through and I add all of these amounts up, I'm going to have $10,700. So I'm going to come over and put my total here at $10,700. And then I'm going to have my net income. Now my net income is going to be my total revenues minus my total expenses. And that amount is going to be at $21,200. Now I need to double underline that amount, and it also needs a dollar sign. That double underline means that I am finished with this particular statement. It is the end, and I don't have anything else to do with this statement. When I finish the statement, I then move forward, and I would go through and I would look at the statement of owner's equity. So I'm going to go over here and look at the statement of owner's equity. So again, we have the header, and so I have Wilson Mowing Services. I then am going to have the title of this statement, which is Statement of Owner's Equity. And this is also for the year ended December 31st, because we are looking at a full year. Now, this company just started, so he contributed $30,000 at the beginning of the year. What this means is that at the beginning of the year, so when I start with my beginning capital, it is at 0. Now, it is going to be whatever the previous year's ending balance was. Since we were not in business last year, it's going to be a 0 here. I then have to go in and add, and the things that I would add to this would be capital contributions, I would also add a net income. Well, the capital contributions is going to be $3,000. Now notice I moved this over. I indented over a column because I have some things I need to add up. The net income is coming directly from this statement, or the income statement at $21,200. So I'm going to come over and put the $21,200 here. Then I'm going to add these two amounts up, so I do a underline. Now in this statement, I'm not going to have those totals. So what I am going to have is I'm just going to move over and add these up, get the total, and then move it over to this other column. And so this amount would be at $24,200. So I would add the beginning amount up plus the $24,200, and I would just end up with the $24,200. Then I'm going to take and look at the things that I have to subtract, and I would say less. Now the things that would be less would be the drawings that the owner takes. If I had a net loss on the income statement, it would go here. I can't have a net income and a net loss, so it's going to be one or the other. In this one, the drawing account was $12,000. If we go back and look at that trial balance, we'll see that $12,000 on it. And then we have the net loss, in this case is 0, because we do not have a net loss. So I would take and add these two amounts again. I just add them and they move over. So I would have the $12,000. And so this is going to leave me, in this particular case, I would have the ending capital balance would be at $12,200. Notice the dollar sign, the double underline, because I am finished with this particular statement. The last statement that we are going to look at as far as Accounting 101 is concerned is the balance sheet. Now the thing I want you to remember about the balance sheet is that it is coming directly from your trial balance. So when I look at it, you'll see I have assets, I have liabilities, and it's really going to be everything above that red line you're going to use. Now the other item that is on this is going to be this capital, but with the capital, it's got to be the ending capital balance. So this right here is actually what's going to move over to the balance sheet. Is going to be that $12,200. It's not going to be that $3,000 that was on the adjusted trial balance. So again, we have to start with a header. Wilson Moving Services. You are going to be looking at balance sheet is the title. Now this one is a little bit different than the others have been because the balance sheet is only for one moment in time. So only thing you're going to have here is the date. You won't have anything else listed out there. What we're going to do now is I'm just going to do a simplistic, I'm not going to do the classified balance sheet. I'm just doing a regular balance sheet to where I just list all of my assets. So I would list my assets, indent over and list those out. So I would have cash. Cash is going to be valued at $6,800. I then would list my accounts receivable. Accounts receivable is at $2,500. I then have a truck for $8,500. And I will have equipment at $6,300. I will total up all of my assets, and so once I add up these four accounts, I end up with $24,100. Dollar sign, double underline, because I'm finished with this part of the statement. The thing that I want you to remember is that when we are looking at this particular statement, it follows the basic accounting equation, which is assets equal liability plus owner's equity. So we have just done the A asset section, and then we're going to come over now and do the liabilities and owner's equity statement. On this side, when we look at this statement, or this portion of the statement, we will start it with liabilities and owner's equity. Then you're going to indent over and do your liabilities. And my liabilities, I'll indent one more time and I will list those out. So I would have, accounts payable. I'm going to have salary payable, and I would have notes payable. So with this, the accounts payable was valued at $3,500. The salary payable was $200, and my notes payable was at $8,200. So I have all these amounts underlined because I want to add those up. And I would get $11,900 as my total liabilities. The next section is that owner's equity section, and I'm going to be looking at the capital account. Now remember, that capital balance is coming from right here. It's the $12,200 amount from the statement of owner's equity. So I'm going to come over here and put the $12,200. I then will add my liabilities and my capital, and I will get the total liabilities and owner's equity. And when I add these two numbers together, I get 24,100. Again, $, double underline. Now this 24,100 should equal the 24,100 here. If they don't equal, then you're not in balance and you've done something wrong, and you need to go back and check those accounts and see where you've gone wrong. Now again, this is the simple balance sheet. You will be required to do a classified balance sheet on your project. So make sure that you know how to do that classified balance sheet for when you are working on that project. But these are the statements. These are the order they have to be completed in. You have to complete the income statement. Now, why do you have to complete the income statement first? Because the number 21,200 is going to appear right here on the statement of owner's equity. You do the statement of owner's equity next, and then that 12,200 will move over to your balance sheet. So these are the orders, are the order in which you have to do these individual statements.